Welcome back here with Money, Money, Money. And this week is all about mutual funds. We've got lots of queries coming in with the markets at 10,000 on the Nifty. Are you in the right funds or not? So we're answering, or at least trying to help as many viewers as we can. The next one is a tweet that we've got actually. Remember, Ask CNBC TV18 is a hashtag. Anytime you have questions on stocks, mutual funds, just follow that hashtag and the questions are going to come to us. So this is from Rajiv Gore. He wants to know about a couple of good small cap and mid cap funds for the next 5 years. So, you know, Mr. Rustagi, everybody wants that one dream small cap or mid cap fund that can, you know, get you a nice chunky return, right? What comes to mind in this market?
Well, I think, as you rightly said, these mid and small cap funds have been doing very well. Market as a whole has been doing very well. And of course, if you look at the performance of these funds, they have done actually much better. There are a couple of funds that I can recommend to him. They're not necessarily, you know, very aggressive funds in this category, because currently, I would say that, you know, one has to look at the quality of the portfolio rather than just looking at 1 year or 2 year past performance.
Sure.
So I will begin with maybe L&T Value Fund.
Okay.
I mean, as the name suggests, it's a value fund. It basically allows investors to benefit from the anomalies, value anomalies which are there in the marketplace. Currently, it's investing around 50% in large cap and 50% in mid cap. But if it sees value there, the fact that value strategy is a little aggressive. So I would say that if you're looking at that kind of aggressive portfolio, go into this L&T Value Fund, which has been doing very well. The second recommendation would be HDFC Mid Cap Opportunity Fund. You know, considering the fact that, like I mentioned earlier, the mid-cap segment is a little aggressive. This fund maintains a very well-diversified portfolio. It has an excellent track record. It basically, you know, follows a buy-and-hold strategy. But at the same time, there is a flexibility that if the fund manager feels that, you know, the valuations are not stretching a bit, he basically gets out from some of the stocks. So clearly, I think that is one of the reasons why the funds have done pretty well. Third fund, I would say DSP Small and Mid-Cap Fund. You know, one of the key factor when you invest in this category of fund is the stock selection, because that is what differentiates one fund from other. This fund has done very well in terms of stock selection. The good thing is the fund manager again follows buy and hold, which means that it shows confidence in his own ability to pick the right stock. So I think these are three funds I would say if someone is looking at either investing for the first time in mid and small cap segment or increasing exposure. These are the funds I would recommend one should be looking at. Okay,
fair enough. The next query is from Mr. Nishit Saxena. He's a retired gentleman and he says that, can you suggest a good systematic withdrawal plan? He wants to park about 30 to 40 lakh rupees in this product and he wants to know the merits and demerits. Now, interesting question, Mr. Rustagi, because of late we're seeing a lot of fund houses really go out and aggressively push the concept of a systematic withdrawal plan. Does it make sense with the market being where it is right now? What is the age profile of an investor who should be looking at a withdrawal plan?
I think first thing I would like to inform him that SWP is not a product. It's a mechanism that allows you to withdraw a fixed sum at a pre-decided interval. Now, what typically happens is, let's say you have a corpus invested in a particular fund and you're looking to generate some regular income. The problem for people who want regular income has been that if you have been investing in fixed deposit and small savings scheme, the returns have gone lower. Also, the returns are not tax efficient. So the post-tax return is very, very low. Second thing is, if you look at any other option market-linked product, even offered by the mutual fund, like you have monthly income plan and the hybrid fund that I talked about earlier, they also have an option of monthly dividend. The problem there is that because they are market-linked products, you know, the dividend that you get on a monthly basis can go up and down. So if you don't want that uncertainty for you, because if you're a retired person, for example, you want a certain sum of money to come in every month. SWP helps you there. So what happens is that you have a corpus invested in a fund. You give standing instruction to the fund that I would like to have 10,000 rupees every month on this date. What the fund does is they will redeem the units worth 10,000 rupees every month and give it to you. So what has happened is, despite whatever happens in the market, there is some amount of certainty in the fact that you will be getting this money. But important thing is, where is this money going to be invested? SWP can be done in any product.
Yeah, which is what I was asking. Are almost all the major fund houses offering this withdrawal sort of option in almost all their funds right now?
See, there are two types of mutual funds which are offered. One is closed-ended, one is open-ended. This cannot be offered by the closed-ended fund because you can't take the money out. Any open-ended fund, any type of open-ended fund will offer this systematic withdrawal plan to you. The key factor is, when you're talking about withdrawing money, fixed sum every month, you want to make it tax efficient.
Yeah.
Okay, so there are two ways of doing it. One is if you can do it at the right time, you accumulate corpus in a fund over a period of time, and when you retire, then you opt for systematic withdrawal plan.
Right.
By that time, all your gains would have become long-term capital gains.
Yes,
so when
anyway,
you withdraw,
there's no tax.
You're not paying tax on that.
Yeah.
Even if you're going into a debt fund, you get the benefit of indexation. So
After
there's
3
hardly,
years.
After 3
Yeah,
years.
yeah.
So hardly any tax that you're paying.
Sure.
But let's look at somebody who wants to start investing now. My recommendation in that case would be that if you whatever your requirement for the first year, keep that aside.
Okay.
Invest the money, the remaining money, because then you're going to withdraw after 1 year.
Only after 1 year, so there's no tax implication on it.
So by that time, this will become long-term capital gain.
Correct.
And then you decide to opt for SWP depending on how much money you want.
Absolutely. Okay, so that's how you can approach systematic withdrawal plans. Quick break. More questions continue to be answered on the other side. This is Money, 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 the mutual fund special.